imagine a world where essentially trade finance distribution is happening seamlessly from banks, ideally from the bank's back office system, all the way through to the broker, to the insurance carriers. And where you can do this in a many-to-many environment and without actually having to deal with documentation on a manual basis, without sending emails around, and everything is real time and everything is essentially kind of like at your fingertips. So the good news is there is such a system now in place, and we have built it together with members of the Trade Finance Distribution Initiative. It's still at an early stage in terms of adoption, so that's why we would love to work with you and take you part of the journey. My name is Christoph Gugelmann. I'm part of Tradeteq. I'm one of the founders of Tradeteq. Tradeteq is a technology company which has 60 employees globally. We operate mostly out of London. That's where our headquarters is. And we operate fundamentally two different products. One is the single name product. We call it Tradeteq Connect, where you can upload something like an MT700, and we're moving quickly now also into other products, and you can negotiate it with many parties. And then there is a second product which we're not going to look at today, but I just want to mention it for completeness sake. And this is the repackaging, where you need an asset transformation, and very often what we do is we insure what gets basically repackaged. So this could be a pool of 1,000 receivables which revolves and which benefits from credit insurance.
Yeah, good morning everybody. I'm very pleased to be here because I think with many of you, or almost all of you, we have collaborated through Texel already. So you know us, Commerzbank is one of the leading foreign trade banks in Germany, and we have a large volume of transactions that we daily run through our systems. And of course, we have a lot of challenges facing us in the future. And one of them is, of course, costs and digitization that could help us to manage the costs in the future better than we have done in the past. We want to get away from handling transactions, let's say, rather manually. Trade finance is very complex, and therefore we're looking for solutions that can help us, and Tradeteq is one of them. And of course, we will do this together with our partners, with Texel, with you. And we're trying to build something that will help us to manage this better in the future. And that's why we have started very early on, let's say, to collaborate in a certain way and bring in our knowledge of trade finance and building something together that now is working, that now is reality. We have live transactions on the platform that we will see later on already with some partners. But we have to build a marketplace. And why do we do that? Because we want to change trade finance from this manual single operation also in the future to be able to look at portfolio transactions maybe, and to open up maybe to other investors that traditionally have not been in this business, because investors many times are looking for new products that they can go into. And trade finance is very complex. So with the complexity that comes, we need to find a solution that reduces the complexity, and the platform management is a perfect way of doing so. We could do that on our own. We could have built a platform our own. The problem is we don't have the money to do so, because then we would have a platform and offer this to our partners, and maybe another big bank would build their own platform and offer it to the partners. So everybody builds a platform, but that is not efficient either. So we have to find a market solution, a one platform, or maybe there's room for several platforms, but not every counterpart in this business can build its own platform and offer it to everybody else. Maybe that had been the idea of some, but it does not work. It's just too expensive and complicated. The onboarding process, for example, would make it impossible for us to onboard 5 or 6 platforms in Commerzbank from our partners. So we are trying to look into a good solution, and that offers a marketplace to everybody. And therefore, that's why we're here, and we're trying to promote this and to explain it also and to understand what's going on. So that's our part, and of course, we are looking forward to all your questions and details that you might have on your mind. Thank you very much, and talk to you soon.
So why would Texel be involved in this? I guess you'd see it as a disintermediation potentially between the parties. And I guess if we're talking frankly, we're not doing the best job for our clients if we're not getting the most optimal way of executing an insurance contract. we have to look at our business by origination and distribution. We think on the distribution side and the data management side, the system we've built for single transactions is very efficient. But how can we offer something to our clients and potentially to the wider market that can optimize and originate more of the assets that the insurers are looking for? That was our decision to work with Tradeteq. They're independent. We don't own any shareholding in them. We have no financial interest in their business. Our job was to fund their platform. And in building their platform, from the insurance side, we're here to try and create something whereby we can have the market increase its banking, trade finance origination in an efficient way, and that third-party intermediaries, the brokers of this world, can work together, thank you, Thomas, to increase their clients' business flows as well. But in order to do that, we need a deep pool of distribution from the insurance market. And I think that I probably, hopefully, wouldn't be just talking for you when I say that you'd like to write more of this business more efficiently without maybe the man hours, woman hours, to try and do it at the moment. But it's inefficient looking at trade finance, bank-to-bank assets on a single transaction basis without trying to create some scale and some effectively efficiencies. So that's why we've partnered with Tradeteq, and we can explain, I guess, in the future how the role of the broker may look with respect to platforms like this. But I'll hand over to Adam, who has real hand-life experience of this platform and can talk to you from briefly why Liberty are here.
Hi, yeah, thank you. I've probably pulled the short straw going last, as I'll be repeating a lot of what everyone else said already, and I'm also inviting competition onto a platform for me, which probably isn't great. But no, the reason we're doing this is, we've been writing short-term trade finance now for 4 years, and every year it's been growing and growing and growing. Last year we wrote over 250 transactions, which is at a point now where it's just not manageable in the traditional sense of, e-stamps now, or traditional wet stamps, and processing it as we normally do. What Tradeteq and other platforms as well do is it just helps with the efficiency, both of placing the business, quoting on the business, and what we're also going to get with Tradeteq as well is the ability to draw information post-bind to immediately feed it into our systems. So we basically don't have to do any manual entry at the latter end. What I think we're here for today to help with you people is what we found in the past with other systems is they don't have that pull for clients unless we have a big sort of capacity, but bulk of capacity from the market. If you're just one insurer on there, you're never going to get everyone on board because you're always just one market and one other process as opposed to just going to the rest of the market. So I think if we can build a big marketplace, that's when we can really drive sort of utilisation from our clients and brokers, and hopefully write this business a lot easier because it's getting tough.
So what this is trying to show you is some of the things that we have implemented on the platform, working with Thomas and Adam and Simon to try and work out what would be best for the insurance market, and working with the banks on one side and the insurance market on the other. I've put it into 4 different categories there, so you can go onto the platform and you can create your own capacity rules on the platform. So one of the ideas of it really is that you can automate your simple transactions and then leave you much more time to do your complex transactions. So if you've got something and you know that it can just be accepted, then you can put your rules on there and it will just go to have a straight through acceptance process. You still have to do the signing of documents, but there is that straight through bit so that those easy transactions will just go through automatically. And when we have that, we can also have it so that the rules and limits get updated throughout the day. You can make choices on whether you do those based on the initial part of the process or whether you do it just when something is as being bound. The limits will also update when you have an exposure reduction, and they will also be able to look at MT 707s, for example, so an amendment, and get that automatically accepted as well if it fits in with the criteria that you have put onto the platform. So that's one part, which is this capacity limit part that we have built for this automated acceptance. Even if away from that, if you think, well, we've got our capacities on one system and how do we really want to transfer them? We've also got the things that would help you, such as we've got notifications, which is fine. We have reporting and analysis as well that comes out of the platform, and automated document creation. So I'll show you some of those when we go onto the platform, and you can see the kind of reporting that we have. Again, we've been working with Liberty a lot on some of the reporting, so it's like the idea is that it can fit into your internal system, so you can download it, import it into your systems, because we understand that you are going to be doing transactions in all sorts of different places. So doing the analysis on the platform is not, is nice to have, because really you need that information to come out of the platform and be able to be fed back into your systems. And so that's kind of one of the key tenets that we have, that it's working with you to make sure that you can integrate your data into the platform, and anything that comes out of it you can then use and put into your systems again. So it's not like you have to have it in this format and you have to take something from this format. It's what format do you want it to be in, and we can work with that and then try and give you the information that you need. So we can do it through APIs, but obviously doing APIs requires work on your side as well. So we have a full suite of APIs for all of these things, but it's just that amount of time and energy that you want to put into it. So we would always say do it through a CSV or something to start with, so you understand exactly how it all fits together, and then move towards the API integration after that.
I think one of the things maybe to note, and maybe one of the historical concerns from insurers with respect to platforms, was about having to upload capacity, manage it in respect of the platform that they have and their traditional way of executing and monitoring transactions. This is very much not a platform where you upload your capacity. This is a platform which should be integrated into your day-to-day management of your trade finance exposures, such that you're managing your origination and your distribution, the execution of trades on the platform, but that's integrated into, as Ben was coming from, into your own exposure management systems, so that you can conclude a transaction traditionally via somebody coming to Lloyd's and signing something in wet ink on having queued up for an hour, or you could have done the same thing on Tradeteq, and the two would have the same end result with respect to your limits and your country exposures, etc.
Not on the APIs, no. It's the same difference. We're starting off with the CSV file, and then once we get that bulk, we will look into the API. But yeah, it's time and resources to build them up front.
So I think in this, what Emily will show, and you'll get through to the underwriter screen, is how you establish the rules. And if you have those rules and you optimize and you manage those rules, you become more efficient in utilising what you have in bank exposure and issuing bank capacity.
So in terms of, there is a CSV file at the moment that is used then for uploading capacity. It looks a bit like this. This is one of the things that we'd like to work with you on, in terms of, what kind of structure of information would you have that you get that you can then put in. Are there any other things there that you would need to have? And also in terms of what's the timing for that. Would you do it every night? Would you do it every week? So it does track things automatically between times on the platform, but how much of it needs to be stored in yours, because there are obviously other things going on, so your capacity will be adjusted from other transactions within your organisation. So it's that kind of information that would be great to work with you on, to then say, well, what is the use for this, and what are the things that we need to track on the platform versus what would you be tracking on your internal systems? Because you get the choice of quite a lot of settings to be able to say, what am I tracking here? What am I tracking on my systems? All right, so if I just go back here. So what this is showing here is all those limits that I had updated on to the platform yesterday, which is why they're all marked as new. And that you can see there a brief overview of the different rules that we have in place at the moment. This is just a brief overview of this at the moment, because then I'm going to go into the process, and then we can run through some of a few bit more details behind it. As you can understand, the devil really is in the detail in a lot of this thing. It's about how can you override those limits. How do those limits actually work in practice, especially if you've got overrides, and what are the different rules that you have. So you have here limits that are for issuing banks, that are at a bit code level. They do parent up to an 8-digit bit code. So if you put in 11-digit bit, you can put in an 11-digit bit code, but it also, if you could put an 8-digit one in and you get deals in the 11-digit ones, then they will aggregate up to that kind of level as well. And then at a higher level still, then we have limits also at a country level. So you can put those in as well. So you can then make sure that you're not breaking any of the rules that you have. So what I will do is I'll move on to a sample transactional flow, and then you can see how those work in practice, and then I'll go through a bit more detail on those.
So we've said it, as Emily said, we can sort of set the timing of the report yourself, but there's an automatic daily report that gets sent to us via email, and we've setting up so it goes straight to where it needs to go internally. So yeah, essentially every day anything that's bound will be reported to us. That gets sent through to our ops team or whatever, and then that will automatically pull onto our, because we've not built I suppose it's like a soft API. It draws on the data within the CSV file, plugs it into our system, and I just think I have to click confirm to say it's done. So then the next morning the live exposure will be on our ag reports. So yeah, that's as quick as you want. In terms of the upload, we're still deciding how we're managing that internally. I mean, because we have quite a large focus on the short-term trade finance, we do have some blocks of capacity that we do carve out from our wider ag, so we have a nice, easy ability to be able to load a lot of rules up and a lot of capacity. You know, depending how successful this is, it's not out of the question that this could become our central capacity management system, and then it's actually feeding from this into other systems as well. But again, it's all going to depend on what happens over time and how much we do on it.
So I think the rules part of the platform is very easy to expand, and I think they have, through the Tradeteq platform already on the receivables side, many thousands of rules that can be drawn from that side and applied to the Connect module. So yes, that can entirely happen. And I think more interestingly as well from there, you can vary rules by grantor, so by client as well. So maybe for one bank you have certain rules, certain levels of capacity that you can even commit on the platform to them, and they can manage their business with those committed lines, which are not available to other clients on the platform. So you are optimizing your rules and allocating them by not only by country, by issuing bank, but also by grantor, by insured effectively. So yes, Murray, it can definitely be updated to reflect those types of, if it's 24 months, then our minimum pricing would be this, if it's this. But I would hope, fingers crossed in the future, what we're trying to achieve here is more of a follow the fortunes type result with certain clients. But we understand insurers have minimum criteria for pricing, etc., on certain countries, certain issuing banks. You can manage it in a transactional format effectively and see everything that comes through. It won't hit any of the rules because there aren't any, but what it'll say is, would you like to insure this transaction even though it doesn't meet any of the rules? Yeah.
We can, from the bank's point of view, upload a Swift style PDF that comes out of their internal systems, and then create the offer based on that. So although it's not necessarily that much relevance to you here, but it's just the sort of that end-to-end transaction is what we're aiming for. So we take something that is produced by their internal systems and map that format of file so that can be uploaded onto the platform.
Can I add something, excuse me, to this aspect? When we started to talk to Tradeteq, it was for us very important to have something where we can input all the transaction data, the complete data, without doing a lot of manual work. Because traditionally, we have our operations in our letters of credit, that's the main product here, in our systems, and then we started to type in an email or type into, we have an internal platform, part of the letter of credit data to create an email and so forth. This has been overcome already by starting from the point of uploading. For the time being, we don't have the APIs, but we are going in this direction also. So we upload a Swift, and the system replicates the Swift fields basically on the platform. So we have all the transaction data from the very first moment on, the complete data on the platform. What you do with the data later on is, of course, your own choice, but I don't have to reply to questions. What is this part? What is that part? Can you add more information to the transaction? We need to consider this and understand better. It's all there already. So that already is a real step forward for us, from starting from our side, the lifecycle management.
So I've uploaded it, as you may have seen on there. I'm not going to fill in all of this here because there are a few things that then need to be filled in. Then what they would do is that they would edit the other details that are needed here. And when we were talking there, I think there was a thing about instrument type and different kind of instrument types. So there's one question about that. That here that you can, or they can add what kind of instrument type this is. Sorry. So they can add and say what it is, and that will then go into the rules engine. So there are a couple of fields here that need to be filled in that drive some of those rules. So it's not just information that comes off the Swift fields as well. So there are some things there, such as, like latest possible due date and things like that, which go in, and those are things that drive the rules.
Well, the transaction data is pulled on the platform by uploading the Swift, and then of course we have to say, okay, how much are we willing to pay, to offer to you, and what is the latest possible due date, because in some case, depending on the partner, we have agreements that they say, okay, if there's an extension, then you don't have to come back. We automatically start insuring it maybe 30, 60 days longer than the theoretical date. And so that you can manage it more easily when a small extension comes. So we can define these fields, but it's not the transaction data as such that we have to fill in like we do it now from our own system still.
So all these things down here, which have green dots on them, those have been filled in from the upload of the file already.
And then,
so
for
those
example,
are the actual details.
yeah,
of
we
the
also
LC.
have to say, okay, do we want to sell or insure 50% or 30% or 70 or 90%? So these fields we have to define and say, okay, that is in this specific transaction, that's what we want to do.
You do need to put in the bit code of the underlying risk, yes, and you need a bit of things. So you need the things that are going to drive the rules, the capacity rules that you might have. So, such as like the latest possible due date, that kind of the maturity of it, and an indication, obviously, of the price, things like that. So you need a small amount of information, but you don't need importer, exporter, port of loading, all that kind of thing. So you don't actually have to attach it. That can then be attached at a later date.
It goes from indicative, and then you'd need to then complete the full details around the letter of credit to take you into a position where you could then get the documentation to conclude the transaction. So you'd go from an indication of, yes, we could do 90 days on this bank for this period of time at this type of price, but you can't go from there to execution without having the Swift upload, for example, all the transaction details, and you still, as an insurer at that stage, have the opportunity to say no when you bind.
Indication is automated on the basis that I've got X amount of rules.
Your rules,
and X
exactly.
match.
Yeah, entirely. And I think we can come to also how you can hold capacity, how long you hold indications for example, because that's built into the system as well. If you choose to say, for this client, for this type of transaction, I'll keep that indication there for 7 days, and it'll effectively block that out of my system. But after 7 days, if it's not been used, it goes away again. So you can, I guess, depending on the client, depending on the flows, you can be more flexible maybe than you would normally be with an overnight indication. And in this case, you can hold capacity, but it's managed in a digital fashion and then released again within the period of times that you set.
Right, so here I've got one that I've already created, and I'm submitting that at the moment for approval internally. So we have a whole range of allowing sort of 4i approvals at different parts of the process, if that's something that you need as well. And you can customize that and then say at this point, so for example, when you're creating the documentation, then you need 4i's, but you don't need it for the initial acceptance, or the other way around, however you want it. And so that can be done. So here I'm sending an offer out to 2 different counterparties. And so when I press approve and send, that will get sent off. And at that point, it will run through the rules engine of one of these counterparties. Connect Insure, it should run through the rules engine there.
Maybe just quickly on that, one of the points here is that the client, in Commerzbank's case, for example, will have Texel effectively as the intermediary, and behind there will be a list of insurers that have agreed their wording, that are agreed to execute via Tradeteq, for example. And the client can pick one insurer if they have a regular flow with them. They could pick 5 insurers. They could go for the whole market for each transaction. So the client has a bit of control there, and then the insurer, I guess, also has the capability to build partnerships with their clients to say, we're going to do this type of flow for you, and they will always choose that insurer for that type of flow. If it doesn't meet the rules, maybe then they extend the offer to other insurers that are participating on the platform. So it gives the client the capability of, I guess, being targeted in how it approaches the insurance market, but able to offer one transaction to the whole market if it chooses to, and that's how it normally operates.
So what you've seen here is this one where I just sent it off, I refreshed the screen, and then it came back immediately as terms agreed.
Well done, Adam. Your terms are agreed. Move forward.
So, and it's come back as exactly the same amount and the price that was proposed initially as well, because that's obviously how I set that one up. But it can also do it so that if you, in your capacity rules, you had put in for this issuing bank, you had a minimum price of 2.3, for example, then it could then send back 2.3 as the proposed price as well. So you can do that. You can do that. Put those settings in as well. So it's not. You wouldn't necessarily fail it completely. You could then send back whatever you thought was the minimum, and then that would be up to the grantor to make that decision.
And I think if you think further forward in this process, you'll start to learn about why transactions are failing against your eligibility criteria. So you can optimize those to see those flows and effectively start to get transactions concluded. The client doesn't know why, the broker doesn't know why, but the underwriter can start to see, well, I've had 5 LCs, each time failing by 4 basis points. If I just change that, suddenly those transactions would have been concluded. So you can start to, I guess, become more interactive or more, have a better sort of enrichment of the data that you have on this, and maybe therefore originate more assets in that space. That comes down to, I guess, your agreement as well with the client. So, for example, if Commerzbank have consistently or have in history agreed to pay 70% of the commission as their premium rate, then that may be what they put in. They may put something slightly lower in. But you could build a rule that says I will only offer 70% as my minimum commission that I will take, premium I'll take on each transaction. And it may well be that is above. Therefore, it will go back with a higher price to the bank. It will come back as whatever you've set the rules around. And I would suggest most of the insurance market historically has looked for sort of 70% of commission in these types of transactions. So they would already know maybe what your minimum might be anyway if it's 70%. But actually, if you're hopefully in time, the acquisition costs are coming down, the transaction efficiency is going up, that 70% becomes much lower, and therefore one would hope more origination again.
I'm just first of all going to say what happens here when you've got 2 that have come back, and then what happens then. So this one here, is this the right one? Yes, this is the one here where I've got two participants, insurers have come back, both with identical terms actually, and so they're both willing to take it all. And then I can go into here and I can do the request insurance document, and then I can fill this in as the grantor. So at that point I can then choose who I'm going to actually offer to. So I could offer to both. Here I've obviously got more, so I then have to work out how I'm going to split that between them. So if I just chose to split it 50-50, that's fine. But if obviously at this point, if they had then also come back with different prices as well, then I could put in the different prices here too. So if this person here had actually said 2.5, then I can do that as well, and then I can just send that off as the request, and then it will create one syndicated insurance document, but 2 different insurance schedules for the different insurers. But I can do that all in one go if I want to. So I guess that's similar to the flow that you would have currently through a broker, that they would then be able to say these are the people who are going to.
On day one, you'd know who your other insurers are because you'll syndicate in a traditional one insurance declaration with the insurers on it, but the schedules will be separate. So you'll just have your individual pricing. There is a lead built in at the moment to the Commerzbank documentation. So you can define per the Lloyd's requirements, Lloyd's leads, following claims parties, etc. And I think that's part of the process with any banking client for Tradeteq, is to take what is their master insurance documentation and then map the declaration to the system so it can be digitally created. This is, you've issued an indication based on the rules, the client's seen it and has said, I'm interested in pursuing this. And I think at this case, Emily went back and said, I would like to request that the documentation is now drafted, and that will be done digitally, and therefore you will see a copy of that before anything happens from your side, i.e. you're not banned yet. Okay. You will shortly be banned, but you have the choice to do that.
The point is, we just really want to build out these rule sets as much as you can to essentially capture everything that you would normally worry about. I think, particularly talking with the LCs in our experience, there aren't too many particular parts of the risk that will be a sort of a dead block for us, and that's where we need to pick those out. So another good one, which we're probably working on next, is how we block out certain, say, ports of loading. So in certain countries, obviously Russia's a very good example. If the port of loading or the port of discharge is in Russia, that would be a rule that we can then say, right, that needs to then be referred to us for them to look at it. So hopefully the point is, as we grow the rule set out, we won't really have any of those questions or any of those points where a quote matches and then you suddenly see it and think, oh my goodness, I don't want to do this. That's where we want to get to. But yeah, certainly from day one, we've got to build those rules out. But for us at least, we've got what we believe are the minimum requirements to I think probably 95% of the deals that attach would be ones we're prepared to go onto straight away. There is technically a way you could engineer it that you might be able to find a minimum pricing, but again, on an official submission, they have to enter the net margin, and as you said, you have a 70% of net margin is one of the rules, so regardless of what they're putting in, we'll still get that 70% of the net, even if our floor pricing is 50 basis points lower, so we are still hidden from that, and we certainly don't see what you're putting in either.
Yeah, you're effectively in your own little pod for your own rules, your own capacity, and your own management of the transactions. And the aim is to bring as many of those pods together to syndicate transactions for one client, and then in theory grow the capacity that you can put into this to make it more efficient.
We can do that. At the moment, it's not yet built for goods, but yeah, that's another one where we're looking at, because obviously, as you said, certain countries you only want to do strategic goods and not just any old transaction. But yeah, that's just another thing we've got to build into it. But it's perfectly possible and something we will look to do sort of once we get going. But yeah, at the moment, it's the more basic things. So maximum aggregate, maximum transactional amount. So a good example is you might have 30 million of capacity for a Bangladeshi bank, but you don't want to do one 30 million LC. You only want to do 6 lots of 5 or more. So you can set a max transactional limit, pricing, commission, i.e. what percentage of margin you're getting, retention, as well. So that's another one. And then what you can do, as we've also spoken about, is you can change that for each insured that you're working with. So, you might be more comfortable with one bank working in one country than another, so you take a slightly higher a lower retention or slightly better pricing and whatnot. But yeah, it's perfectly capable. It's just we're working with Tradeteq to build out the rules that we want.
Thomas, for example, the LC, the SWIFT documentation will incorporate the underlying goods, but they're not homogeneously entered into letters of credit. So
yeah, that is, let's say, at the goods side, that's a problem, because in some cases it's very technical specification and you don't really understand what it is, and then you have to go back and say, hey, what is this KYXC 500? What is behind that? Is it a gun or is it wheat? But by a special specification. But this still needs to be done because it depends on the underlying transaction, and we cannot change that yet. But the good thing is, the more the system and the marketplace will build up, the more rules will be established one time on one platform, and you don't have to establish an own platform internally with all the rules, because if we're all doing this to automate our internal process, it's impossible. But if we have one platform that does and expands the rule system, you built it once, and then you can enable the rules to all the participants or underwriters, and you can enable the rules to all the banks. So it's a learning, let's say, a learning ecosystem, but the more people are on there and the more we build it up, the better it gets for everybody. And then once you have done that work, of course it takes some time to input the data and all that. We need to build something on a new platform that is outside of our own bank. But once we've done that, it will be getting better every day. And that is a good story for us also internally.
Yeah, I mean, market-based consistency, standardization of data, even just in this asset class would be phenomenal, I think, for our market to be able to report more efficiently to regulators internally, and I would hope do more of this business because they can get some consistency in the reporting, both within an insurance company but also within an insurance market as well. Yeah, I guess is it coming back maybe to the underwriter? How would you, from the SWIFT that you're given, note that you're, I guess the information that can be provided is the information available to the bank. If they can provide you that via the platform and you've built the rules that mean that you won't cover those transactions, then they should be picked up. But I don't think you're going to be in a position where you can change the insurance product to the back end to remove something that was agreed that then had a sanctions event later on to it that you weren't comfortable with. So what would you normally see in a SWIFT document? That's what you'll get here. I can't see that you'd get anything more or less, or you wouldn't get anything less via the platform. So if it meets what you're currently seeing for the letters of credit that you're getting, and the banks are uploading those in a fashion where you're comfortable working with Commerzbank and its trade finance flows, and you see who the applicant, the beneficiary, and all the parties, then I don't think there's anything more that would come normally, I would say, probably. Yeah, yes, although there is some discussion around sanctions and running the applicant and beneficiary through a third-party sanctions checking, I think.
And we've got one going on at the moment with a receivables transaction where, similarly it's like, well, there's a lot of sanctioned countries which we have to set up the rules for. But obviously they change quite a lot on a daily basis. So, but it's like, well, and then finding out whether is it UN sanctioned, is it EU sanctioned, is it US sanctioned? So I think that there is a whole list of trying to work that out. So it's kind of a project. But I think at the moment you'd say these are the countries of issuing back I cannot do and then we can move towards creating rules for importers, exporters, the ports of loading, etc., and be able to put those in so that you can then just say these are the countries I can't do.
Well, maybe also another option for solving or resolving this question or problem is you have all the transaction details by uploading or re-uploading the SWIFT, and then you have all the information. You just take it out of the Tradeteq platform through an API and move it to your sanctions control platform if you have one, if it's not done manually. And so this could also be resolved on your side by automatically feeding from Tradeteq to your control systems. And that, for example, on our side, on the letter of credit point, we get the SWIFT message in our systems, and automatically the SWIFT, before it gets to Tradeteq, the SWIFT is being completely screened by our check tools. And if there is, let's say, where it says North Korea, it automatically pops up and somebody has to authorize it. Of course, we wouldn't do it, but just as an example,
I think as well on the going back to the reporting function, one of the other reports we're building is the quote report, and again you can set the timings of that. So realistically, I appreciate letters of credit can move incredibly fast, and sometimes it does happen the day you're quoting it. But in which case, I imagine the bank would understand we need to run those checks. But you could get a daily download of all the quotes that you've done, and that would include the data of port of loading, port of discharge, exporter, importer. So realistically, you can, as you said, just look at that information daily, check there's anything on there that is a concern, and then you can send it on as you would on a normal inquiry. I appreciate it's still a slightly manual process, but it's one daily process that you would be doing anyway, right, if you're binding it offline. So that's how we're going to manage it from day one. But yeah, realistically, as we've always saying, the end goal is always going to be integration, having information feeding from our systems to Tradeteq systems to our systems. But yeah, we're not going to be able to do that from day one. So there's still a few minor sort of manual processes that we've got to do.
And on that, here we've got those reports here. So there are various reports here. So this is, as you said, the offer submission report, which can get produced on a daily basis. It's going to download. Here you can see that it is produced on a daily basis. So this has gone in here. So this is that one which is all of the things that have gone in and have been offered or are currently in that status there. And then it's the same as that one, isn't it? And then also then there's a transaction report as well, just while we're on the report page, which then gets produced at the end of each day, which would give you the information of anything that has been transacted on that day as well. Again, also the thing with the reports here, so you've got all the different things there, is that these all these columns here, you can choose exactly what columns you want to have. So these columns, are all there to be had in a report, but you can then just say, I only want these ones, or I want them in this order, or is there anything possibility I can get something else, or a calculation based on those, and then that can be produced for you based on your template, and we can do that. So again, so that's how it would fit then into your internal systems, and these, by being a report that is produced, is also therefore an API that can be used to get that data out as well, because so that is there available for you to then just call and get that information as well. So that at the moment is only if that has been inputted at the moment. So that would be a manual input by the grantor. If then when they put that information in, is one thing we're looking at is to get a more global view. We do have a database of BIC codes versus country versus names of banks. So when those banks are created initially by the grantor or by you when you're creating the rule sets, it will go and check that database. So you can just put the BIC code in and it will come back with the correct country and name. You
can, I would assume as well, create your own links to your own ratings, and then you can see your portfolio by rating and by exposure and by average tenor and by maturity. I mean, the reporting is significant, and the data available is certainly sizable. Maybe quickly, while Emily comes to the sort of execution side, what happens at the binding.
Maybe one thing to add, because you mentioned again BIC code. As you can see, BIC and SWIFT is already a worldwide standardized system that is working for all of us. So that's why we started together with Tradeteq to build on this technical platform or technical information and standard. And from there on, for example, you could link the BIC code to Moody's ratings and see if you work with those, and you just match it by that, for example. That could be also an alternative, because it's all trying to standardize as much as possible, and therefore leaving you the option to get away from manual decisions, and also be able to get a better reporting, because it's all matching by systems that already in ecosystems that exist, and Tradeteq brings that together, or has the potential to bring it together.
And one of the points just on the information side is that the broker is getting the reports that are basically being emailed to them on a daily basis as well. So the role, sort of in simplistic terms, from the intermediary in these transactions will be to represent their client, to speak to the underwriters about trades that are not being hit, the transactions that are not closing, important deals whereby your rules are not quite optimized for the transaction for the client. But rather than focusing on each trade, we're focusing on the ones that are, I guess, not being concluded, explaining and working with the client to explain to the insurers how you can support them in new jurisdictions, or what their experience is, or how they work there, so that you can start to work with them potentially in countries where you're not, the rules are currently not set to their criteria. But on top of that, it's the claims management, it's the premium processing, it's the invoicing. So that side of things won't change. This isn't a way of you having to deal directly with clients, invoice clients directly. That will normally be done for Lloyd's underwriters by exchanging or via Lerma in the bureau. So in that regard, we need to see all the documentation. We have copies of it. But the aim is not for the broker to go into the platform. We don't want to be inputting here. This isn't about Texel uploading an inquiry and sending it to underwriters. This is about you receiving direct inquiries from your clients who are doing it in an efficient way. No, we're not. We are Commerzbank's broker, but another bank may have another broker, and they may well be utilising this platform, and they may wish to use it more regularly. And that broker, in theory, would then be the intermediary to those trades under their framework that they have with the insurance market.
I think the goal really is to build a market platform, and I think Thomas alluded to it, that works for everyone, and that is not sort of an island that someone builds and then hopes that everyone comes, but there are multiple islands and they don't connect. But we want to build one platform that allows as many participants, brokers, insurers, banks, to come on and use it. And we have seen other attempts in the market to build individual platforms. The banks have tried it, their brokers have tried it. The problem is always, do you trust your competition that much that you give them all your data? Is it really convenient to have multiple platforms that you have to use? I mean, everything still takes time. You need manpower, womanpower to do it. So I think having that one market platform, and that's why we started with Commerzbank building this, Liberty and so forth, doing this is really the goal.
I guess that's down to Tradeteq and their plans, but just from a personal perspective, my opinion would be that that's just down to your internal company's decision as to how important trying to do some more of your business efficiently will be, and how you'll get the IT budget for it, and that'll be different depending on the institution that works with the platform. And I guess from Liberty's side, the view was we've got the integration that we need to a certain stage, which is effectively a CSV file that someone's mapped for us that we can do efficiently. And if that's enough to start with, then that maybe puts it maybe 10 or 11 on the list, but it'll eventually get there. But you can still use it in the period of time between day one CSV file and day 3,600 of API. I don't think it should stop it, but I wouldn't say it's the first choice is to then take this and apply it to white space to populate a slip to then do it through the white space execution platform. I don't think that's needed at the moment.
No, I think absolutely right. It's all about efficiencies and about integration, but it's always the question. You have to start somewhere, and this part of the market already has a lot of potential for gaining these efficiencies, for reducing friction costs, and that's where we started. But of course, there's a bigger picture to look at as well.
And it also changes the paper as well by the issuing bank as well. Sorry, the issuing bank, the grantor. So in that case, for example, when the documentation is produced, it would be your system and your rules apply to the security you can provide to that client, and then the intermediary, in theory for that client. Hopefully you won't be saying no to one intermediary here or there, but yeah, I guess that's also part of the process as well.
By the way, just a little detail. If you have a case with Commerzbank that you say, okay, we cannot do that for Commerzbank, let's say Switzerland, just as an example, just let us know, because then we can rebook it in Frankfurt, and then where you probably, have enabled Commerzbank. But that is, of course, outside of the platform in this case, but just not to lose the business.
So the first one was what happens if you have questions. Fine. So this one here is at offered. This did not get through the automation rules. So here you can look at it, and what has happened is it didn't go through them, but I can then negotiate with the grantor through the platform. So I've already entered one question there through the platform. If I go in as the grantor, I can then respond to that question. I won't go all the way through that, but you can then, therefore, you can sort of see there as an example, you can go through and you can then do that negotiation here. Once you have concluded that negotiation, either you can go back and still accept the offer that has been provided, but with the price and the amount that you wanted, so you can then manually put in your proposed amount here, whatever it is, and your rate, so your target rate was 0.9, and your reference number for this one.
And this is to Nick's comment. I mean, you could do this each time effectively. You see each transaction comes through, you can reject or accept or offer terms. It just means it's down to the human response time as opposed to the automated response.
So we produce some reports for the grantor to say how many of, how many responses were automated and what's the average time of response and things like that. So if they cared, then they could see that and they could then decide to prioritise. But no, they're not. There is no automatic prioritisation.
Export the chat that you've had
Yes. Yes, so so it's all fully audited, so you've got that there, and then there's a history tab if anything has changed on the terms or anything during the life cycle of it. Again, that would be there, and it would export both of those things.
We get a copy of it, I would assume, but it will be direct from the bank. And I think in reality, on letters of credit, the general requirement from an underwriter in a question situation is traditionally, how much experience do you have with this bank, and what is your current net exposure to that bank, basically. And that type of information can also be built into maybe the annual discussions, semi-annual, quarterly discussions you have with the client and the broker to go through, well, in Bangladesh, our exposures are as follows, our history is this, and therefore you won't be having to ask them trade by trade, but instead it will just be the infrequent one you might see, and you say, well, I've not seen them in this country before. Do you have a local branch? Do you have, I don't know, foreign clearing for this bank in New York? Are there things that we should know that will help us underwrite this in a more efficient way? But yes, it will be direct response from the bank. Texel won't be able to enter anything into that.
This is just another one that failed the rules, just to show you, and here then you can actually see then what rules that it failed. And so the information here, so that you've got that then to go on if you then wanted to then say, oh, right now I want to manually respond to that, or just reject it. You have that information there. That also does get sent to the broker if you have a broker aligned to you, and it will get sent to you via email as well. So you would get a notification by email, both if there was something that was automatically accepted and if something was failed the rules, and it would tell you which rules it failed. But as I say, that also goes to the brokers, that they can then get involved at that point to intervene and then try and work out.
I think we'll start easily with the other brokers. It's us. I mean, there's many discussions taking place with the ABCD of broking houses, all of whom I think are being pushed by some of their clients to be supportive of this. I would suggest they're not always maybe, thanks James, they're not always maybe as willing to engage in discussions when they have their own software. But I would hope fairly shortly one of the ABCD houses will sign up to it. And they may choose to integrate it with their software and package it as just an improvement on their own platform. But I would suggest the winds are fairly strong for other brokers to join it. And we've had a call, I think a 4-partite call, I can't even work out that would be, between a client, another broker, Tradeteq and Liberty, to explain that their client wants to use it, the underwriter would like to use it. Why should the intermediary try and stand in the way for something that's going to make their job easier and actually probably earn them more money in the event in the long term? I mean, if you looked at the banking clients from an FI side in our market, they will have master, what are they called? The PMA, basically. Yeah, platform master agreements with Tradeteq. Japanese banks, Dutch banks, German banks, Middle Eastern banks, Swiss banks, and so from their side, they're ready to come, but they can utilize the product with one insurer, 2 insurers, maybe a reinsurer, who, by the way, I think are quite busy on it, and therefore, or they could use it maybe with 20 insurers, and then it would, considerably scale up. And I think from an execution perspective, it's a very efficient system. But I would suggest also it's worth, entering into discussions with these guys just about the master platform agreement, which is something you signed and your legal went through, and hopefully wasn't too painful a process, as it comes with no cost. And it's worth seeing it, trying to use it, and I think hopefully from there originating more business from it. In theory, no. So this platform will connect to an insurance side from this module, but it also connects to risk participations, and it also connects to other banking institutions that you can sell or unfund assets, or sell or risk participate assets to. So it's effectively the 3 pools, and from those insured assets, you could, in theory, then sell those to an investor pool as well, the NNIPs or EGONs of this world. If you chose to, I guess, do it, that could happen. But in the grand scheme of things, what would be is we have an LC, some risk participated, some distributed to a bank, some insured. I think the last piece, and then repackage that into an investor, might be more complicated at the moment. But you could definitely have a 100 million LC, Thomas, which you could share with one of your banking partners, one of your risk participants, and insurers.
I mean, from our side, we of course are working with brokers, insurers, reinsurers, and banks for the risk distribution, but we want to move it all on one platform. So today we do it different ways with different counterparts. For example, we also were using a platform of a insurer, but we had to take it off because we cannot host many systems and platforms internally because it's such a big cost. So we said, okay, we want to move it all to one platform, which is a market standard, and not, let's say, you mentioned whom you are owned by. You're not owned by Deutsche Bank or HSBC. So I don't want to move to a bank or to a counterpart platform, but to a market platform. So I had to turn off another platform. We have Tradeteq now. We have to do annual reviews. Of course, all this is by banking regulation. It's a, let's say, a rather costly and intensive process. But we have to do it, but we cannot do it with 1,000 platforms that might be there. But the ecosystem is growing, and the good news is the market volume. I mean, we've talked about costs and commissions and fees. The risk is not disappearing. I mean, we can look at the world. The risk will always be there. Letters of credit will always be there, although they've been announced dead for decades already. But they will always be there, and we need to manage it more efficiently in the future. And I think the market for us as Commerzbank, yeah, it's like going up and down a little bit, but the market will grow, looking around what is going on in the world. So we need to also be able to quicker move our portfolio and not be so stuck to single individual transactions and discussing and all that. So the platform will help us in the future to better move our portfolio or manage our portfolio. At this point, we've invested a lot in building this part of the platform, but as the Tradeteq colleagues mentioned, it is already on their side an ecosystem of various assets that we can use the platform through, and so we are looking, of course, at the future. I don't have any decision or any real goal because it's a living ecosystem, so it's developing. But the more partners we get into the ecosystem, the better it becomes. That's the idea.
The aim is that underwriters should look at this as an asset class that's almost independent to their current portfolio. It frustrates us that, and Adam has had similar conversations internally, I'm sure, that you're consuming aggregate in the emerging market exposures that you're taking on a trade finance basis, and they're removing potential to support longer term project or infrastructure finance in emerging markets. Hence, it needs to be done in a more efficient way with different reinsurance structures, with a growth specifically focused on trade finance, to allow you to scale up what are probably sub-investment grade assets from a country perspective, but with much better than investment grade PDs and LGDs. So I would hope that this would allow underwriters to look at their pool of LC business in a much more efficient and segregated fashion and build reinsurance treaties or build consortia or build efficient ways of distributing it so they can do more of it. I would hope you'd all see the idea of doing more trade finance 5, 6, 7 times a year, flows of 30 to 60 to 90 day LCs is a really interesting way of balancing your portfolio out from what is getting longer term and a longer weighted average life in each trade. So that's where I'd like to go, but that's not me that's going to do that. It's going to be the underwriters who want to do more of it. And I think if you can say I'm doing more of it efficiently, then you can justify the reinsurance programs you may need to sort of to structure in order to do more of it. And then hopefully we conclude some trades and actually you start to work out ways that you can say, well, actually, I could do more of this if I change this rule and that rule. I think that the data here, I think, is super exciting for underwriting.
And I can offer you, for example, once you signed up and you're more efficient, you have more time. We have, for example, now this is concrete. We have elaborated a very deep dive presentation on Bangladesh on all the banking regulation, letter of credit regulation, how it's worked, how they manage, how the country and the central bank manage their reserves, which are, let's say, the risk part of our business. And we could offer a presentation through Texel to all the underwriters to dive into that instead of discussing single transactions. And while we're presenting, your system automatically through Tradeteq approves 10 transactions.
Binding well sat there. I think we all have to understand you're not going to get risk in Germany out of this. But you're never going to get it. You're going to have more emerging market risk in countries where you're facing probably limited country capacity. But you've, I hope, got to build the story both internally and with reinsurers that the historical default rates are one bank in a country goes, the rest of the banks are saved. Manage your exposure by bank and by country in an efficient way. Build a reinsurance program that stops losses, and you can do this really efficiently. I think that would make
the work from a platform perspective much easier, but it's whether or not you can, and other intermediaries can be happy to push that upon their new clients and or their current clients, whether they're happy to change documentation. I think we all recognise the most efficient way to do this is risk participation in a very efficient way, like the banks are doing it. And then you become a market that is a standardised market from a product specific to this underlying trade flow. But I understand everyone worries about leakage of that product into their other clients, a longer term business. Are we insurance licensed to do that? Fine, they will have those discussions. I think it will, the more standardisation here, I know Hugh and I have an argument about that all the time. I'm not a big fan of standardisation because no one's standard in our market and everyone thinks they're individuals. So you can't standardise something. But if you can at least take a product the banks are doing with other banks, then I think you've got something that can be scaled up very quickly.
And I think that's never going to be solved by a platform, right? That's a market-wide issue, as you've said. It's engaging people to do it. But there is other initiatives with ITFA, which is obviously what trade finance distribution comes with as well. And one of the key things on that is harmonisation of terms, which I think will take ages, but we have to get there one day. We are doing other stuffs going on in our market where we're trying to standardise wording, so I don't see why this is the obvious next step. But
It's a key question. For example, within our bank, we have decided we will only work in risk participation for my area, let's say the letter of credit business. We will only conclude new agreements with participants on the standard of BAFT 2018, and we will not negotiate. Because we have hundreds of contracts in place, and each one is different in a little part, because everybody wants to have his own little add-on, and this is not feasible anymore. So we have to go to market standard contracts, and also in the same sense to platforms, market standard platforms.
But if we talk about
too costly
values, banks are running, and again, I don't know the exact figures from Commerzbank's perspective, but probably average annual exposures of more than 10 billion in trade finance, and distributing more than a number of billion in trade finance every year, and our market sees a very small part of that. And therefore, how can we see more of it? Well, it's making our job and their job more easier to document it and execute it, and that's what this can do, and also our market could do from a standardisation perspective of policy documentation. Because if it's more than 10 billion with Commerz, it's more than 10 billion with Deutsche, it's more than 10 billion with some of the other banks, maybe they would say it's less or more, but around those figures. And trade finance gaps that are in the many, many tens of billions that can be met by more distribution and mobilisation of unfunded participation. So.
And what we expect, now looking at the worldwide development and risk development, we expect that we will have to become faster in moving our portfolio, unfortunately, because we do see a lot of uncertainty. So maybe we will be forced to offload quickly part of our portfolio. And how do we do that? So we will have to rethink trade finance also, not only trade finance, of course, but the capital management. I think it will become more stressful for all of us. I mean, you cannot just take it on from us because you have the same risk criteria or risk evaluations to do, considering your capital. But I think the whole market will move faster, and therefore we need solutions to enable that. Because if my board, like they had done, decide to or the supervisory board even, we had a lot of changes there. There came in one guy and said, I think we have a little bit too much exposure here and there, which actually is not, he's not supposed to do the daily management. But then all of a sudden, the board decided on his recommendation to offload part of the portfolio, and we had to do it. And so that was a big effort, and it would become easier if we have platforms. And I personally do expect more of volatility in our portfolio management to come, unfortunately, but the better solutions we have, the better it is.
I think one of the points we have as well is that, and it was alluding to what you said earlier about there being other banks on the system buying the risk. We, as insurers, definitely see the smaller piece of that pie anyway. So it's not going to be a case of secondary banking market stealing what we're writing. It's more likely going to be that we're going to start to see a greater share of what would normally go to secondary banking market. I mean, speaking to other clients, one client told us they distribute 1,500 LCs a year, and only 50 of them came to the insurance market. So we're just seeing the thinnest of the thin wedge. Whereas if we can suddenly, on a platform like Tradeteq, where the syndication market for the secondary market banks and us as insurers are on the same platform and seeing the same risk at the same time, quoting at the same time, assuming we're confident in our pricing and whatnot, we should see a remarkable increase in our market share on that. So that's one of the other drivers for us as well, that we think by being on this dual platform, we're actually going to be taking risk from the secondary banking market and bringing it into the insurance market.
Great. I think we've probably sated everybody's appetite for digitisation on a Thursday morning. Time to go away and think and talk to your colleagues, and thank you very much. Cheers, everybody. Thank you very much.